Hello, everyone. Welcome to the second session of our two-part webinar series on choosing your China structure. The idea behind this series is to help you with some of the most common dilemmas that many of our clients face when they're starting to plan their China business setup. Last week, some of you joined us as my colleague Florian Braunsteiner spoke about the implications of setting up in Hong Kong compared to mainland China, and went through some of the advantages and disadvantages of combining both locations. In today's session, we're going to assume that you're considering to set up in mainland China. We'll go over the different corporate structures that you can choose from when doing so. And we'll focus specifically on whether you should set up a WFOE, i.e. a wholly foreign-owned enterprise, or whether you should go for a representative office instead. My name is Pegya Hui, and I'm responsible for marketing and communications at Fiducia. I'm here to introduce you to your speaker for today, Laura Velasco. Laura is Client Services Manager at our Shanghai office. As such, she advises and supports our international clients in everything that has to do with corporate services, i.e., getting their China company up and running, helping them restructure when necessary, and so on. Laura is Spanish, and she relocated to China more than 8 years ago. Since then, she has worked in the fields of business administration, management consulting, and corporate services, so she has a lot of hands-on experience that she will share with us today. We're going to keep the webinar short, approximately 30 minutes, including the Q&A session at the end. And throughout the session, please write us your questions through the questions panel, and Laura will address some of them at the end. However, the session is quite short, so we won't have enough time to answer all of them, but we will get in touch with you over the next few days to answer by email or to arrange a call. You can also use the questions panel to let us know if you're having any technical difficulties, and we'll do our best to help you solve them. So that's it from me. Let me hand it over to Laura and let's get started.
Thank you very much, Pekka, for the kind introduction, and thank you to all the attendants as well for joining me in presenting today's topic called Choosing Your China Structure. Should I set up a WFOE or a rep office? Before we start with today's topic, I would like to mention a few words about our company and what we do. Fiducia supports international companies in China and Hong Kong with a wide range of services. Our team comprises more than 120 experts who are distributed along 4 offices located in Beijing, Shanghai, Shenzhen, and Hong Kong. For over 35 years, we have helped clients navigate China's complex but promising business landscape by delivering integrated solutions in 2 main categories, which are advisory and outsourcing. Today, we will be focusing on the corporate service part, where we will be sharing insights based on our clients' experience. Through this webinar, we intend to cover 3 main topics. We are going to introduce first, the different foreign investment vehicles available for foreign entities in China. Then we will analyze the key differences between those investment vehicles. And afterwards, we are going to list the considerations that investors should take into account prior to entering the Chinese market. To close this session, we are going to share a couple of case studies we have prepared based on the business profile of today's audience. Now, let's begin with the first of our topics, foreign investment vehicles in China. As a foreign enterprise, there are multiple ways to enter the Chinese market. All they have been listed on this slide. But most common solutions include representative offices and limited liability companies. I will go into the types of WFOEs in more detail later on. Now, let me briefly explain each of these investment vehicles. Representative offices. Rep offices are a non-legal entity that represents the parent company overseas. They are usually established to operate as business liaison, as they can't really engage in business activities directly. However, in China, some rep offices can engage in operations in a lawful way, but only in very specific sectors. For example, if let's say a law firm wants to enter China, to operate in China, actually, the only possible way is to set up a rep office of a foreign law firm. Likewise, foreign airlines can only operate in China through representative offices. Limited liability companies are separate legal entities in China. They are called wholly foreign owned entities or WFOEs if the entity is 100% subsidiary of a foreign company. Or they are called joint ventures when there is a partnership between a foreign and a Chinese investor or two foreigners. The main difference between joint ventures and WFOEs is that WFOEs allow investors to have complete control over the business. In general, WFOEs are a much more common structure than joint ventures. However, there are specific situations where investors could be interested in setting up a joint venture. For example, if the foreign investors wants to leverage the market know-how of the Chinese partner. Additionally, there are specific sectors where actually foreign investors can only enter through the setup of a joint venture. However, due to its comparatively higher popularity, today we are going to focus on the WFOE structure. Now, there are three types of WFOEs. They all the same legal identity, but differ in setup costs, estimated timeline for incorporation, and obviously a scope of business activities. The first of these three types are the consulting WFOEs. It's a type of WFOE that actually allows providing services in China. For example, marketing services, accounting services, general consulting services, etc. The second type are trading WFOEs, also known as foreign invested commercial enterprises. Companies under this category can import and export, but also perform wholesale, retail, and franchise operations. And they can also provide related activities or related services, such as after-sales service or technical support. Last but not least are the manufacturing WFOEs. As its own name says, it allowed companies to manufacture, but also to process and assemble, as well as export and import and sell domestically. Of course, these kind of WFOEs can also provide related services, as mentioned before. WFOEs with a manufacturing scope require additional licenses, and as such, setup process usually takes longer. Now, what are the key differences between rep offices and WFOEs that investors should be aware of in order to choose the best structure for their China operations? WFOEs can formally engage in business activities. They can issue Chinese invoices and receive payments in Chinese yuan. WFOEs can also generate profit, and this profit can be converted to foreign currency for funds repatriation. WFOEs can also hire direct employees, and there are no restrictions on the amount of employees that a WFOE can hire. Also, WFOE structure allows the setup of branch offices in other cities in China or in the same city if necessary. And last but not least, WFOEs are the most effective way of protecting technical information and trademark secrets. Just a side note here, registering your trademark in China can also take quite a long time. According to our experience with ongoing projects, estimated timeline is around 12 to 18 months. Now, we advise clients to get started with their trademark registration as early as possible. As a matter of fact, you don't need to have an established WFOE for that. So, we usually advise clients to first start registering the trademark registration so that when the WFOE is fully set up, they can really start operations by ensuring that their brands and their products are fully protected. If you have any question regarding trademark registration in China, let us know because we can also help you with this. Now, continuing with the WFOE structure. Disadvantages. I will mention that the setup process is more complex and lengthier as it requires dealing with multiple authorities. On the right side, we are commenting most important features of rep offices in China. And in my opinion, there are three core advantages. First of all, this solution is considered an inexpensive and easy method to enter the market. Since there is no registered capital requirements. So basically, rep offices are financed by the mother company. And setup time is relatively shorter. It usually takes 2 months to complete the registration process. But the list of disadvantages is significantly longer than disadvantages of the office. First of all, rep office structure is often not recommended due to the fact that there are many operational limitations. Only quality control, product promotion, market research, and similar liaison activities are permitted. Rep offices cannot invoice clients, or actually, as a matter of fact, they cannot directly engage in operational activities. Additionally, rep offices cannot hire employees directly. If any employee that has to be hired under the rep office has to be hired through an HR agency. And actually, rep office structure only allows hiring for foreign nationals. And in this regard, you have to take into consideration that Hong Kong, Taiwan, and Macau citizens are considered foreign nationals in China. And last consideration is that the authorities require the mother company to be at least 2 years old in order to allow the creation of a representative offices. As I was mentioning in the previous slide, rep office does not require the capital injection, but WFOE does. The level of investment of a shareholder into a WFOE is commonly called registered capital, and it actually marks the limitation of liability for the WFOE. Many clients ask us about the minimum registered capital. In general terms, there is no minimum registered capital. This was abolished in March 2014. However, the authorities still somehow follow the guidelines previously established as minimum registered capital to approve or reject applications for company setup. Additionally, there are specific industries that do have an official minimum limit. For example, international freight forwarding companies. Basically, the minimum registered capital for these kind of companies depends on the freight forwarding services they would like to provide. Additionally, also capital requirements may vary from locations by different locations and also due to different business scopes. For me, the trickiest part about calculating the registered capital requirements of a company is not that there is a minimum required capital, if applicable. The important thing for investors, for our clients, is actually to be able to understand their cash flow needs, how much money they are going to need until actually they estimate that the company can be self-sustained. Because this capital injection is what is going to be used for daily operations to run the company until really the company can sustain itself. If you register too little capital, this might leave the company short of funds. Obviously, it is possible to inject capital at a later stage, but this is going to be time consuming and it's going to take some time. On the other hand, an overcommitment of capital could mean that you end up in China with unused resources that could be difficult to transfer out of China. For this reason, it is so important to actually try to make an accurate capital estimation for your China business. It is also imperative to understand applicable taxes. Both WFOEs and rep offices in China are subject to a number of different taxes: corporate income tax, VAT, and surtaxes, among others. Interesting part here is that even when rep offices are not allowed to generate profit, they are still exposed to substantial tax burden. Why is this? The reason behind this situation is that the authorities understand that the activities performed by the rep office in China somehow help to increase the worldwide revenue generated by the mother company. For rep offices, the team income is assessed at a rate of 10 to 11% on the total gross amount of overheads incurred by the rep office. In conclusion, so what is the best solution for a foreign investor? To be honest, there is no better or worse solution. It all depends on your project plans for China. Overall, a rep office is usually the recommended structure for companies that are still not 100% sure that the Chinese market is a viable option for them. Whereas a WFOE is more suitable for companies with relatively larger long-term plans for China. However, investors must keep in mind that once deciding to establish a rep office, it is no legally possible to directly switch to other legal structures. Chinese authorities do not allow the investor to transform a rep office into a WFOE. Under these circumstances, companies must go first through the hassle of forming a new WFOE from scratch and then shut down the rep office, which can take up to 18 months. For this reason, and taking into consideration the tax burden that rep offices face in China, our common recommendation for foreign investors is to go directly for a WFOE setup, regardless on whether the company wants to engage directly in sales or not. I would like to talk now about the key requirements for WFOE setup in China. When investors decide to set up a WFOE in China, they should be aware that the following decisions will have to be taken prior to start any filing process with the designated government authorities. The first of these decisions is related to the location of the office space and the lease agreement. To register a WFOE or a rep office in China, it is necessary to own or lease office space. In China, office address cannot be shared, which means that only one company can be registered with a specific office address. The lease agreement should be signed before submitting any application for incorporation, and usual rental period shall be at least 12 months. An initial solution we usually recommend our clients is to actually choose business centers, especially at the beginning, because they really provide expansion options for future considerations. The next point of consideration could be the business scope. Every company in China has an approved business scope and can only operate within this scope of activities. If you want to extend the activities of your company at a later stage, it is possible only after prior approval by the authorities. That is why it is so important to really have very clear idea of which activities you would like to perform in China, and ensure that all those activities are going to be included in the business scope of your future entity. The registered capital. As I previously mentioned, the registered capital is the amount that is required to run the business until the company can be self-sustained. There are two important things to note in this regard. First of all, registered capital does not have to be transferred upfront. However, the payment terms have to be detailed in the Articles of Association, which will be drafted during the company setup, and the company shall comply with this time limitation. Second, capital injections are tax-free, which means that investors shall see the capital contribution as a complementary way of financing its China business. Any other way of financing the Chinese operations is going to have applicable related costs in terms of, in general terms of taxes. Corporate functions. There are several positions to appoint within a WFOE structure. However, among this structure, the most important one is the legal representative, who is actually the person representing the company in all official matters. This person does not need to live in China. but actually his personal presence is required sometimes, for example, when opening the company's bank account or when actually applying for specific concessions within the tax office. And last, import and export registration. Each company that intends to conduct trading and distribution activities in China must obtain an import and export license, which is issued by the Ministry of Industry and Commerce. The whole application process, including additional administrative steps, usually takes around 5 weeks. That is the reason why setting up a trading WFOE takes slightly longer than setting up a consulting one. Additionally, there are certain product categories that have higher safety requirements and as such require additional registration. For example, hazardous chemicals or food products such as poultry or wine. Now, we are going to enter now into the practical part of today's webinar, which are the case studies. As I said, we have chosen these two topics based on the profiles of today's participants. First of our case studies is related to the retail industry. How can I run retail operations in China? Opening a retail store requires the investor to first set up a trading WFOE. Obviously, the business scope of this WFOE shall include all the products that the company aims to sell in China. Once the WFOE or the company is fully registered, the WFOE or the investor should set up a retail branch. This procedure usually takes around 2 months. The branch will also have a registered address. In this case, the address will be located in a commercial space. Retail stores are not required to have registered capital as they could be dependent on the WFOE. In this consideration, it is important to remark that branch offices are not considered legal entities in China. A branch office has the same legal identity as its parent company. In this slide, actually, you can see how the group will be structured when a company intends to actually provide retail services in China. The second case study we would like to mention today, it's related to manufacturing WFOEs. And we have chosen this topic because it also has impacted recent regulation has also impacted the situation of some of our clients. When setting up a manufacturing WFOE, there are a couple of extra administrative steps and requirements involved in the licensing process. One which is worth pointing out is the environmental impact assessment report. We bring this up because since 2017, China's environmental regulation has been getting much tougher across the board. On this slide, you can see how environmental fines and inspection have increased for manufacturers in the Shanghai area in the last 3 years. Our clients have also reported that it is tougher to get the approval from the environmental authority, especially if the manufacturing site is close to China's biggest cities. The reason behind this is the current battle of the government to reduce pollution levels. So, 2 advices to bear in mind if you plan to set up a manufacturing WFOE. First, choose your location strategically. As I just said, setting up factories near big cities is nowadays much harder than before. And second, make sure that your environmental impact assessment report is accurate. One of our clients has recently encountered problems because the environmental impact assessment report was understating the amount of hazardous waste that they will be emitting, which later on got them into trouble because the actual emissions will always exceed this quota.
Thank you, Laura, for a very concise and informative overview. Now, before we get the Q&A session started, I would just like to remind you that Fiducia publishes a lot of insights on this and other China-related business topics on a regular basis. So if you want to stay up to date, we invite you to follow our company page on LinkedIn and to subscribe to our newsletter, where you'll receive our latest publications as well as invitations to future webinars and events that might be of interest to you. You can use the QR code that's on screen now to subscribe. Now, Laura, I'll hand it back to you so that you can get the Q&A session started.
Exactly, Pekka. So there have been multiple questions sent through our chat function. Due to the time limitation, I have selected two questions that I believe could be relevant for the majority of today's audience. But as it happens with the previous webinar, we will ensure we give answers to all of these questions via email during the following week. Now, the first question I would like to reply comes from Robert, who asks the following. Is it allowed to change the location of my company in China? Yes, it is possible to change locations, but only within the same city. It is not allowed for WFOEs to relocate in different cities. If your intention is to change cities from, for example, Shanghai to Beijing, then you will have to set up a new WFOE from scratch and afterwards deregister the previous one. In order not to impact your China operation, it is imperative to keep this chronological order. First, new registration, once the setup is completed to transfer your employees, and then start the deregistration of the previous WFOE. Now, bear in mind that the registration processes, as we mentioned before, might take up to 18 months, so this will be a long process. There are two possible situations when changing locations within the same city. The first one is if you are going to relocate within the same tax district. Then in this case, it is only required to submit an application with the Administration of Industry and Commerce. And then once the approval is obtained, then you just have to update the address details with the different government authorities and your bank. But if the new office is located in a different tax district, then apart from handling an application with the State Administration of Industry and Commerce, the company will have to deregister with the current tax district and register with the new one. According to our client's experience, this deregistration procedure can take up to 9 months, which actually can seriously disrupt the company's operations. And that is why it's so important to keep the long-term goals of the company in mind when choosing your office location from the beginning. The next question I would like to reply comes from Jana. Jana says, I have heard a lot in favor and against virtual offices in China. Can they really be used for company registration? Yes and no. Under China's current laws and regulation, it is not allowed to apply for business registration by using a virtual office. However, there are certain economic and development areas, such as Shanghai Free Trade Zone, where the concept of virtual office is generally accepted. Now, even when the authorities in very specific areas are issuing business license to companies registered in virtual offices, it is important to take into consideration which implications this decision might have in, let's say, the long term. Why am I saying this? After obtaining your business license, companies should register with a designated tax office and start paying taxes, declaring taxes, and basically they start the relationship with the tax office. Registration with the tax bureau usually doesn't have any complications, even if actually you are registered at the free trade zone in a virtual office. However, we have seen cases where companies haven't been allowed to become general VAT taxpayers due to the fact that they are registered in virtual offices. What does that mean? Well, not being able to change your taxpayer status from a small VAT taxpayer to general VAT taxpayer means in practice that companies are not able to offset input VAT from output VAT, which leads to significantly higher tax burden. Or what's more, according to the VAT regulation, it is required that any small VAT taxpayer needs to be upgraded to a general VAT taxpayer when their sales volume reaches 5 million RMB for 12 consecutive months. Now, how this could be done if actually the authorities doesn't allow you to do it, if the tax authority doesn't allow you to upgrade, but they require you to upgrade by the law. So it is important to see that any decision in China has to be taken in the long term. So, according to our experience with different clients and different, let's say, situations, we understand that virtual office for the time being are, let's say, a decision that will only be beneficial in the short term. So, our recommendation would be, if you are planning on entering the Chinese market, probably to sell products into China or to provide certain support services. Um, I believe that you intend to have employees. Those employees will be sitting in an office. There are no big office requirements from the government authorities. Even a 25 square meter office will suffice for office registration. So, considering this, our recommendation would be choose a physical office space and uh, do not utilize virtual offices. Now, I think our time has passed. We would like to thank again all the participants, and please feel free to send us an email if you have any further question regarding today's topic. As mentioned before, we will reply by email to the rest of the questions that have been raised up today. And thank you very much, and have a great day.
Thank you, Laura, and thanks to all of you for dedicating 30 minutes from your busy schedules to us today. We will be sharing a video recording of the webinar with you over the next week, so don't worry if you couldn't take note of everything. Now, I'm guessing some of you will want to discuss your specific situation in more detail with Laura or any of our consultants, so don't hesitate to get in touch with us. Our email and phone numbers are on the screen now, and we'll be happy to take your emails or calls anytime. Now, that's it for today. We do hope you found the session useful and that we will be seeing you in future events and webinars. So from the whole Fiducia team, thank you for your time, stay in touch, and have a great day.